Hey everybody, Rob Maurer here, and today we have more on Tesla in China, including domestic sales, exports, and production for November. We've also got a couple of comments from Elon Musk, further updates on Tesla's management team, a report on Twitter's debt situation that may be relevant to Tesla, and a couple other items as well. Tesla stock kind of dragging today after more reporting on production in China from Bloomberg. Today we'll talk more about that later on, but Tesla on the day today down about 1/3%, closing at $173.44. The Nasdaq was up 1.1% on the day. All right, let's start off with the November numbers for Tesla in China as reported by the China Passenger Car Association today. Earlier today, I did share that production number on ShareLoft. Tesla's November production was again a record 88,654 vehicles produced during the month. No big surprises on the Model 3 and Model Y split, the ratio coming in similar to October, 56,105 Model Y, 32,549 Model 3. This is up 56% from last November, and almost 1,000 more vehicles than Tesla produced in October. So this is the fourth consecutive record production month for Giga Shanghai. While that total production number was only up about 1% month over month, it's actually a better increase because there was one fewer calendar day in November. So on a daily production rate basis, that's about a 4% increase month over month, which is pretty solid for 1 month considering no further production upgrades. I'm really happy with this production number. This is about 800 more vehicles than I had in my most recent November production forecast. On the sales side of things, of course, the 100,000 wholesale sales figure had previously been reported. That split came in a little bit more domestic heavy than the insurance data would have indicated. As you may recall, that was tracking a little bit more towards 59,000 or so, and domestic sales came in at 62,493 in November. So a good reminder that those weekly insured unit reports get us close, but they're not always perfect matches for how this report comes in. With those domestic sales being a little bit higher, since we know the total, that obviously means that exports would be a little bit lower, so 37,798 exported during the month. So we can now put these new figures into our tracking table, and comparing wholesale sales versus the production number that we now have, we can see that Tesla sold 11,637 more vehicles than they produced in November. No major surprise there. Once we had that wholesale sales number, we knew that this was going to happen to some extent. Now we know the exact number. And that contrasts with last month when Tesla produced 16,000 more vehicles than were recorded as wholesale sales. So looking at the total quarter, production has outpaced wholesale sales by about 4,400 vehicles. And then for year to date, that number is about 13,000. As for the domestic or retail sales, I think we've talked plenty about that. Obviously, this is a record by a long shot for the first 2 months of a quarter. But the questions are going to persist until we see how December comes in, as the real volume from prior quarters has always been in that third month. Now, this is almost certainly getting too far in the weeds, but for completeness sake, just updating a train of thought that we discussed earlier this week. The combination of higher domestic sales, although it would seem good, and higher production counterintuitively weakens a thesis that we had discussed, hypothetically not a thesis that I was buying into, but the possibility that the drop that we saw in weekly insured vehicles could have been due to the combination of inventory being drawn down enough and the remaining vehicles going to export. When I thought there were going to be 41,000 exports, that meant the average weekly number in November was 9,500, with 37,800 being the actual number. That lowers that to 8,800. So that lower average weekly rate, which was probably declining throughout the month, plus the 11,670 insured units, that's now actually falling a little bit lower, albeit slightly, than the weekly production rate. And then with production coming in a little bit higher than expected, that lowers the probability that the boost that we saw over the last 3 weeks in the insured numbers drew down all of that available inventory, causing this most recent week of data to revert lower due to that inventory being exhausted. So those things were kind of supporting that thesis. Those probabilities look lower with this new data. Now, that's definitely still not conclusive, and the other idea that was supporting this thesis could be that Tesla just had trouble delivering vehicles because of COVID lockdowns and things like that. This new data would have no influence on the likelihood of that being true. All right, moving on from those November numbers, we've got another report here from Bloomberg today about Tesla's production in China. Obviously, as we have already talked about a lot this week, Bloomberg on Monday had reported that Tesla planned to cut production at Giga Shanghai by 20%. Reuters also reported similar. Both publications then posted updates saying that Tesla had told them that it was false or untrue. Nevertheless, Bloomberg today reporting that Tesla will shorten production shifts at its Shanghai factory as soon as Monday and has delayed the onboarding of some new hires, people familiar with the situation said. They say that the plant will operate 2 9.5-hour shifts per day from the current 2 11.5-hour shifts per day. As for new hires, they say that the onboarding process of some new hires has been suspended, noting that some production staff who were supposed to start in November were told that their start date would be delayed, One such person told Bloomberg that they were told by their recruiter for Tesla that they should be prepared to start after the Chinese New Year. That public holiday runs this year from January 21st through January 27th. Finally, Bloomberg does note that a Tesla representative in China declined to comment on this today. So we'll see what happens. I've said my piece on this, so hopefully we know more in the next few days. Elon did actually comment a little bit on economic conditions today in reply to a Holmars tweet, which noted that Tesla and Amazon over the last year both down about 50%. Elon said, quote, "Macro conditions are difficult, energy in Europe, real estate in China, and crazy Fed rates in USA," end quote. So we've talked a lot about these macroeconomic conditions. It's not just real estate in China. Alex Potter with some really good callouts on the broader automotive market in China today. He noted that this is the first time since 2008 that China's car market has declined month over month in both October and November, which are historically two of the seasonally strongest months of the year. They calculated that this November's sales on a seasonally adjusted annual rate basis, so just taking what November usually represents in terms of the entire year's volume, to normalize that for comparison with other months, they calculated that at 17.2 million on an annual basis, which they say would be the lowest in 9 years, excluding months that had major COVID lockdowns. So it's a tough market. If people are holding off on car purchases in general, there might not be a lot that Tesla can do, discounting, lowering prices to convince them at this point in time. Sometimes you've just kind of got to wait for market conditions to improve. All right, next we've got another report today on Tom Zhu. Of course, we talked yesterday about the reporting out of China that Tom Zhu was being appointed Tesla's quote-unquote global CEO. I expressed skepticism on that. Today we have new reporting from Bloomberg that Tom Zhu is actually in Austin helping oversee progress at Giga Texas. They also say he has brought some of his team from Tesla China over to assist. So we'd previously had reports that some of those executives were coming over from Giga Shanghai to Fremont, and as far as I can tell, this is likely that same group. So coming over, working on Fremont, now shifting over to Giga Texas, and seemingly led by Tom Zhu that entire time. So that would seem a lot more like a role that president of Global Automotive or something like that would be doing. We don't really seem to have any further reporting on exact titles, really just the responsibilities that he is working on right now. But hopefully this helps improve production rates at Fremont and pace of progress at Giga Texas. Certainly Giga Shanghai has been the gold standard thus far in terms of production ramp speed. So hopefully Tom Zhu and his team can help accelerate that here as well. Chris Zhang on Twitter, who has occasionally had some interesting information to share, says that 4 different sources have told him that Tom Zhu has been working at Giga Texas assisting with the ramp for a long time. As far as the CEO position, Elon did reply to a tweet which said, "Wonder why I don't hear any outrage about Elon's lack of attention to SpaceX?" Oh, that's right, implying that it's only because Tesla is public. But Elon replied, quote, "I continue to oversee both Tesla and SpaceX, but the teams there are so good that often little is needed from me," end quote. So feels like Elon's moving a little bit more into a chairman type of role versus a CEO type of role. And maybe Tom Zhu is kind of stepping into that a little bit, but in reality, it's probably a combination of a lot of different people that are going to still continue to report up to Elon, who will continue to lead strategy, vision, and product and things like that, things he enjoys doing, and leaving the execution to those leaders. I do think this ebbs and flows as needed over time, and to an extent, it's kind of always been that way with Elon managing between Tesla and SpaceX, and obviously right now, Twitter demanding a lot of Elon's attention. So on one hand, you could take that as a positive. There are good leaders in place managing a very strong business. On the other hand, you could take it as a negative that Elon seems to be a little bit less involved right now. And I think the reality is that we don't really know. It feels bad because the stock is down and all those things at this moment. But it could be good if Tesla's projects are on track. If FSD is progressing rapidly, like Elon seems to think that it is. If the ramps of the 4680, Giga Berlin, Giga Texas are all proceeding well. If Cybertruck is on track, then yeah, it would make sense for Elon not to really need to be hands-on every single day right now. I think I would still personally prefer it if he were, but I think that's largely because I don't have the level of insight to those things that Tesla and Elon do. And again, this isn't Elon saying that he's never hands-on. I think here he is mostly just trying to acknowledge the teams. All right, last main item for today is another update from Bloomberg. They are reporting that Elon Musk's bankers are considering providing him with a new margin loan backed by Tesla stock to replace some of the high-interest debt that Twitter has acquired as a part of the acquisition. They say that a possible margin loan is just one of several options that have been discussed to potentially reduce the debt burden on Twitter, and that so far the discussions have focused on how to replace $3 billion of unsecured debt which carries an 11.75% interest rate. So a couple of thoughts on this. First, as it relates to a margin loan, obviously, if Elon were considering a margin loan, another option would just be selling Tesla stock outright, like we have seen happen so far. That may be one of the possible options that's being discussed here. But since that has not been pursued so far, it at least indicates that there are other options on the table in which Elon could avoid having to sell stock. So it's probably a positive that he's even considering something like this. Probably indicates that Elon isn't very keen to sell Tesla stock at this level. So that is nice to see. As far as the margin loan, if this is just $3 billion, it's pretty insignificant to consider the impact that that could have in terms of like a margin call or something like that for Elon. The share price would have to get extremely, extremely low for a margin call with that low of a margin amount for Elon. So I really shouldn't be any concern on that front. But obviously Elon would have to pay the margin loan back eventually. And if Tesla stock were to rise, then maybe he would pay it off with the sale of stock at a higher price point. The second thing is that regardless of how this capital is generated, it'll be interesting to see how it's actually facilitated, because Elon can't just give Twitter money to retire their debt with, at least as far as I'm aware. So it would be interesting to see how that gets facilitated from an equity versus debt perspective. So I'll keep an eye out for any more updates on that. That's nearly it for today. Just a quick note, a lot of messages over the last few days about an Instagram account DMing people. It's not mine. I don't really use Instagram too much. My account on Instagram is Tesla Daily Podcast without any underscores or any special punctuation. Anything else is going to be somebody trying to scam you. Don't get scammed. And please report those accounts to Instagram. There's not really much I can do with it. So that is it for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Friday, December 9th episode of Tesla Daily. Thank you.